This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, March 22nd. Starting out with the stock index futures, we did see pressure in the overnight trade. This after the explosions in Brussels. In fact, that took equities globally to the downside. However, at 9 o'clock, we did see a little bit of a bounce. In fact, that was on the trading floor then, and that's when the Richmond manufacturing index came in rather surprisingly to the upside, coming in at a positive 22, which compares to the estimate of 0. So even though we are still a bit lower on the day, there was some recovery on that positive news. Longer term, we do feel that stock index futures are still headed higher as the global interest rate environment still remains very accommodative. Now, moving over to the currencies, flight to quality buying coming into the dollar index and also into the Japanese yen in light of the explosions in Brussels. Also, this, for the same reason, put pressure on the European currencies, especially the euro currency. Also, we did have somewhat better economic news out of the Eurozone, which was for the most part ignored. Also, additional pressure coming into the British pound as inflation numbers in the UK showing a smaller than anticipated increase on an annualized basis, up 0.3%. This is far short from the target that the Bank of England has of a 2% annualized inflation rate. So that's a bit of a negative. Also, as we get closer to the June 23rd referendum for the UK to exit the European Union, it is more likely that we will see additional pressure on the British pound. So either way, either from an interest rate differential point of view or from a political point of view, I think the pound is likely to come under some downside pressure. Also, the Australian dollar, a little bit better, even though we do have energy prices a bit weaker. The Australian dollar being supported by a speech from the Reserve Bank of Australia governor, and he failed to talk down the Australian dollar as he had in previous speeches, so that was somewhat supportive for the currency of Australia. Now, moving over to the interest rate futures markets, flight to quality buying, definitely the main bullish influence, taking credit markets higher across the board. Also, we do believe that the Fed is likely to be relatively slow to raise interest rates this year, even though just yesterday we had two Fed governors saying that there is a possibility that the Fed could raise at the April meeting, which I find a bit hard to believe. Even at the June meeting, financial futures markets are predicting only a 38% chance that the Fed could raise rates or will raise rates at that meeting, and a 74% chance that the Fed will raise at the December meeting. Also, fundamentals appear to be somewhat offsetting, with the bearish influence of rising core inflation rates here in the U.S. being offset by the bullish influence of, in our opinion, a Fed that is likely to be slow to raise interest rates. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.